Hello, great people. Welcome back to Mind Your Finance. In today's session, I want us to talk about the 7 rules of investing. In other words, the roadmap to investing. But before we continue, I would like to request that kindly subscribe to the channel. You can like the video and you can as well leave a comment in the comment section. Thank you for doing that, and let's get started. Now, before you make any investing decision, sit down and take an honest look at your entire financial situation, especially if you've never made a financial plan before. All investments involve some degree of risk, but the reward for taking on risk is the potential for greater investment return. These are the 7 rules or roadmap to investing. The first rule is get started now. No matter one's age, people can have trouble motivating to save or start investing. The most common mistakes that people make often depend on their life stage, and they frequently relate to human behavior. Simply put, as certain behaviors can impede good choices, and our human tendencies can derail even the best intentions. That makes it vital for all people to try to understand the human mind when it comes to investment readiness. Those prone to, actually, if you're watching this and you're prone to procrastination, you should know that the exponential growth of compound interest, investing in the early years can make a huge difference in the long run and can potentially add thousands of money of annual income in your retirement. The hardest thing for so many people when they first start investing is that they don't see results right away. And that's why many will say that I'll just wait to invest until I'm ready later. But what they don't understand, or what they don't know, is you can invest a much smaller amount if you start earlier and let it build on itself, like a snowball that gets larger and faster as it rolls downhill. Now, the real gains come as compound interest builds momentum. So my advice is say no to procrastination and start investing as early as now. The second rule is think long term. Put your money in an asset which will appreciate in value over time. It is proven, and experts will tell you, that long-term investment almost always outperform the market when investors try and time their investments. Short-term investments tend to be controlled generally by emotional trading trends and speculation, which may hamper investors' return and lead to loss of investment. Whenever you want to invest, think long term and how you can make and grow your wealth steadily over time, not overnight. This will also save you from scammers and cheats who come up with investment schemes to play with your emotion and to make you believe that you're going to be rich tomorrow, only to lose all your investments. Now, the third rule is spread the risk enough. In other words, diversify. When allocating your assets, spreading an investment portfolio among different asset categories such as stocks, bonds, and cash is very important. It is a basic method to guard against the risk of losing your money, which is inherent in investing. For socially responsible investors, one could also consider a distribution of assets between stocks and community investing as a form of asset allocation. How you allocate your asset among categories depends on where you are in your life. For example, you might consider the time factor. Ask yourself, is there a particular financial goal towards which you are investing, and what's the time horizon? The longer you have before reaching that point, the greater your ability to assume more risk and the larger your reward potential. A long time horizon allows an investor to weather the ups and the downs of the business cycle and the markets. Another example is risk tolerance. Are you an aggressive investor who can live with the greater possibility of losing money in exchange for the potential of higher results? Or are you conservative investor with a low tolerance for risk who favor investments that provide guaranteed income, such as bonds, over price appreciation? Now, the fourth rule is keep costs low. Most aggressive investors are paying far too much in investing expenses. Reducing these is one of the most reliable ways to boost your return without taking on any additional risk. Lowering your investments related expenses are a surefire way to boost your returns and increase your retirement and allow for a more comfortable retirement without taking on additional risks. Do all you can to reduce your advisory fees, mutual fund expenses, commissions, turnover related costs, and even taxes. Now, the fifth rule is keep it simple. In other words, the simplest way I can explain this is don't invest in anything you don't understand. Consider simplest to understand investment opportunities. The sixth rule, automate your investment. Many of us delay investing or fail to start investing because we are either intimidated by choosing investments, or we are afraid of their risks, or we feel we are not ready. An automatic investment plan can help. It's as easy as opening a bank account. And when you put your investments on autopilot, you take your emotions out of investing, which can temper your fear, or at least limit fear's ability to cost you money. When you automate your investment, you are setting up your investment accounts to be paid every month automatically. You're basically putting your money on autopilot. The last rule, or at number 7, is review your investments regularly. Review your investments at least quarterly to check and know whether everything is working as expected, and whether your investment is where you expect it to be. Lastly, as I come to the conclusion, it is important to note that knowing yourself is key when it comes to investment, because there is no best investment, but your passion and interest can make any investment work for you. Yet the same investment somebody else can try and it might not work. So do what works for you. Thank you for watching this video. If you like this video, kindly give us a thumbs up. And if you've not subscribed to our channel, kindly subscribe and activate your notification bell so that whenever we post videos like this, you will be notified and you'll be one of the first people to watch them. Thank you for listening. Thank you for watching, and See you in the next video.
Tell me pretty lies, look me in the face. Tell me that you love me, even if it's